Hi again. Marcos just talked about how to find innovative ideas and how to ignite them. Now it's time to talk about how to finance millions of projects, ideas, and companies to adapt and thrive in the new economy. From clean energy to infrastructure, finance is a critical enabler for the global low-carbon transition. Trillions of dollars. Many of us have heard the staggering amount of investment, both private and public, that will be needed to finance the transition. Here again, collaboration is key. Global and local financial markets, governments, philanthropies, and business all need to move in one coordinated way. Our next panel will discuss how financial markets have to change urgently to support the transition to a net zero world. We want to dig into different experiences, innovations, and challenges that our panelists have faced both in Brazil and globally. Now, for our panel, please welcome Campbell Moore, Managing Director for Carbon Markets at the Nature Conservancy, Anibal Wadih, founding partner of GEF Capital Partners, Filipe Blackwood Oliveira, Managing Director, Head of Sustainable and Impact Finance Strategy Group at Bloomberg Philanthropy, and Head of Global Carbon Market Utility, and Evelina Olago, Managing Director at Just Climate by Generation.
To end the day, before drinks, we are going to talk about money. As we listen from our speakers today, the transition towards a net zero future requires trillions and trillions of efficient capital allocation across diverse sectors. However, emerging markets face challenges in attracting capital due to the perception of higher risks. Combining that with new, not proven net zero technologies, the challenge becomes even bigger. So in your view, what are the international investors looking for, and how can Brazil become a destination of climate investments?
Okay, happy to kick everyone off. First off, some context. So I basically come from the point of view of an asset, of an investment manager. I work at Just Climate, and we are an asset management firm that's focused on being a conduit of institutional capital towards the highest impact climate solutions. In basic terms, things that can help decarbonize the hard-to-abate sectors of our economy, things like steel production, cement, agriculture, aviation, heavy goods vehicle shipping, in the next 10 years. And the focus on the next 10 years, of course, is because we need to halve emissions by 2030 to get to net zero by 2050. So we basically invest specifically within those spaces, and we look to raise capital from institutional asset owners. So think pension funds, think insurance companies, sovereign wealth funds, your typical international asset allocators, because without their capital, there is no way we can get the scale of the transformation we need. So that's just to inform the perspective. And when you think about what we would look at, and we're a global firm, we're focused on industrial decarbonization as well as nature-based solutions. There's two levels. One is macro and one is climate specific. On the macro piece, the things I will say will not be surprising to you. Overall, emerging markets command a smaller pocket share of the average global investor generally, and so it's a lot more competitive. And a lot of the things will be, is there good governance, good rule of law, macroeconomic stability, not just sort of the inflation an interest rate piece, but FX risk. As you say, it's all about perceptions, and there is a lot of concern around FX volatility because you might have fantastic performance in local terms, but if the FX rate hasn't performed relative to USD or dollar or whatever currency they're allocating in, it can eradicate essentially your alpha and essentially then the incentive to invest further. But on the climate-specific side, it gets a lot more interesting. And so for a firm like ours, we have a global remit and we think about deploying capital across the world for climate solutions. And what we think about really is where can we invest for the highest possible climate impact while still being able to generate returns. And there, the way we think about it is comparative advantage. And something that would be incredibly helpful for Brazil is that, the country overall, there are some sectors in which it's incredibly ahead of the pack. A lot of panelists have spoken about the fact that Brazil's grid is 85% clean, which is in stark contrast to a lot of other countries in the same bracket. But What for us is particularly attractive is Brazil is unparalleled in terms of its potential to contribute towards natural climate solutions. As a whole, NBS, natural climate solutions, have the potential to reduce emissions by, to basically take out a third of the emissions we need taken out by 2030. And Brazil, depending on sort of looking at the latest estimates, could contribute 10 to 15% of that. And there's two parts to it. One is emissions reduction, regenerative agriculture, transforming, and Brazil plays a massive role in terms of being the world's largest beef producer and other agricultural commodities. But the other piece, of course, is restoration, ecosystem reservation, and carbon sequestration in those kinds of ways. So for us, the focus would be, given that Brazil has a huge comparative advantage globally in those spaces, what would be incredibly helpful is policies that support both sides of that support the businesses, the entrepreneurs that are creating the climate solutions, regulatory support, incentives, tax incentives. On the other side, do the same for international investors, as well as, of course, taking care of the macro piece. But on the second piece, actually, a really important part of it is also getting carbon markets right, because your ability to actually generate a return on these things is predicated on being able to have a price for ecosystem services, and carbon markets have a complex and important role to play. And actually, Campbell, based on your perspective, I think you could provide some really important insights on what Brazil could be doing in that regard that would really help with outside capital.
Yeah, I'm happy to do that. And I guess just to add a little more to the introduction. So I work for the Nature Conservancy. I lead our global carbon markets work. We're one of the largest environmental NGOs in the world, working in around 80 countries around the world, and work in carbon markets and natural climate solutions in many of those countries. And before I get to that part, I guess I would start by saying, I think Evelina and I are going to say a lot of the same things on this panel, which is good, because we're going to get a really clear message across here. But I think the number one thing to focus on for Brazil right now, and she just made this point, is when we think about the net zero transition and we think about the role of carbon markets, Brazil has more to gain than any other country out there, right? And the reason is that, as she said, we are not going to solve global climate change. We're not going to reach our climate goals without massive mobilization of protecting and restoring nature. Carbon markets are a key way to do that. The concept of net zero relies on carbon markets. The net part, like carbon markets do the net part, right? Net zero is about, let's reduce our emissions as much as possible, but we can't do that quick enough to get on track for global climate goals. So carbon markets are essentially a platform to allow us to finance climate action by others that's underfunded to net out the remaining emissions, right? And nature makes up half of the global voluntary carbon markets. And Brazil, for very obvious reasons that all of you are familiar with, stands to win there because there's massive opportunities to protect and restore nature, and carbon markets, if the policy is structured right, can help really unlock that. I know we have a question about barriers a little bit in the future, and so maybe I'll just briefly say I think the number one thing that needs to happen right now, and I'll expound upon it in a future question, is really, I think, for the Brazilian government, state government and national government, federal government, to provide clarity. So the carbon markets are going through a really stormy transition right now. It's actually good. The carbon markets that we have weren't built for net zero. They were built, the rules, the science, the norms, the investment modalities were largely built 5 to 20 years ago, before anybody was even using the words net zero. And now the new net zero paradigm requires a higher quality, higher rigor product, basically, higher quality carbon credits. And as we go through this stormy phase of getting to that higher quality and higher rigor, anything we can do to create more certainty for investors is any country that can do that is going to attract capital there. So for Brazil to, I think, really continue its efforts on clarifying national and state policy with regard to carbon markets is the most important thing it can do right now to attract some of this funding. And it's a big opportunity. The sort of estimate of the future value of carbon markets varies a lot because there's a lot we don't know, right? But the upper bound is $1 trillion a year by 2037, so within 15 years. So that's a lot of potential finance to drive into countries like Brazil and others around the world. Yeah.
Thank you. And you, Filipe, Anibal, what do you think?
So my name is Filipe Blackwood Oliveira, so I head the Sustainable and Finance Strategy Group at Bloomberg Philanthropies, but I'm here today representing Global Carbon Market Utility, which was formerly known Global Carbon Trust, back in Sharm when I launched this in November. Bloomberg Philanthropies, along with the Three Karens Group under Mark Logally, want to structure the volunteer carbon market. Why? It's a $2 billion market. Previous to this job, I was working in banking. If I showed up a $2 billion market, no one would probably take me seriously. Let's talk about net zero targets. In the audience here, who believes any net zero target that's out there? Hands up. Okay, we got only two optimistic. Okay, exactly. And that's the problem. It's $2 billion. We believe it's going to grow to $100 billion by 2030. But to do that, we need structure, we need scalability, and we need liquidity. And that's where Brazil can actually bring some structure. That starts with policy. Brazil has the microphone for two initiatives in the next couple years, G20 and COP30. And I believe that is a way to actually bring the Amazon to the picture. Why? Amazon right now is actually emitting more than it actually is capturing. Can you believe that? So I was a couple months ago in São Paulo speaking at the speaking with the Minister of the Environment, and she was in disbelief that that is something that's happening in Brazil today. So I think here we need to talk about, we have a problem. We need to bring a solution. That's why we're speaking. With that, we need financing. With that, we need strong policy. And I feel like to do that, the Global Carbon Market Utility, which is the plumbing of the VCM, that's what we want, will probably bring that. We've had 300 meetings since COP. The market is dead. Let's just be honest. Recently, Delta got sued by $1 billion for claiming net zero. That's crazy, right? So if you are a net zero company, that's why I put the hands up, who believes in a net zero target? You're going to be, if you're a CEO, you're going to be pretty nervous of actually putting out that name, right? So I'll stop there, and Anibal, go from there.
Hello. Well, first, let's have some fun because it seems so serious here. But thank you very much to the organizers. I cannot compare it. Last time I was not invited, so I have to wait this time for me to be invited. Thank you very much. Great work. And please invite me for the party afterwards. Yeah. You started to your question is what the investors want or what do we expect. It's about return. It's about money. And I hope I'm not breaking hearts here, but if we don't provide returns and a sustainable return, we're gonna happen. That said, I love my job. I love Brazil, and this is a great moment to be in Brazil to make that money. There are several. I wrote like 10 entrepreneurs today. Yeah, I wrote about 10 entrepreneurs today that are showing what we can do in Brazil. Entrepreneurs like creating this narrative. Whoever wants to make money and make an impact, come to Brazil. This is, I'm enjoying it as much as possible. For those who don't know me, I'm founder of the largest climate investing firm in Brazil. I had to say it because I'm competing with Luciana.
More collaborating, right?
Collaborate. Next time I'm doing it on NYU, this event. I'm from NYU. My firm manage around $1.2 billion in India, in Brazil, and here. Our sectors are energy, food and agribusiness. It's been tough to invest in agribusiness because of scale. I heard a lot while I was hearing it, we should. I don't think we should. We are doing it. And we are proof in the micro side of the climate fight or climate solution. There are several entrepreneurs that I can name 20, and maybe they're doing it for the money, but at the end, I know you like songs, Luciana, they will say it at the end, I did it my way, and I'm one of the entrepreneurs that trying to solve and make money for our investor. There are some here that will be happy to hear it. Yeah.
Anibal, please give us an example of an investment. You and Evelina, as you are asset managers, give us an example of an investment that you are proving that it's possible to invest in the climate agenda with competitive returns for investors, because this is like the big question, right?
Okay, and you make an incredibly important point, which is that we need to make returns because that is how capital moves. And we need capital to move to spur the innovation, the creativity, the scale-up that's required to transform how we do things today and create a new real economy that's actually compatible with net zero. So this is a great question. The two things have to go hand in hand. I think for me to answer that question is a little bit easier because at Just Climate, we actually start with climate impact and then we underwrite commercially. What does that mean? Our opportunity set are what we think are the highest climate impact solutions that can have an impact over the next 10 years and that can be transformational. And I'll give you an example. Steel making is about 7-8% of global emissions. We're looking for those companies and projects that can disrupt that space and produce green steel that is essentially meaningfully decarbonized. We actually backed a company called H2 Green Steel, which is a greenfield green steel producer in northern Sweden. And once fully up and running, their steel will have 5% of the carbon intensity of conventional steel. So they're cutting out 95% of it. Now, the reason in that case, the impact and the commerciality go hand in hand is that actually the same things that make this such a compelling investment from a climate impact standpoint are what will make it commercially successful. For this particular investment opportunity to have the outside climate impact we're underwriting, and to be clear, when I say we underwrite climate impact, we set very ambitious targets that our investors expect us to hit, and we actually get paid on how well we hit those targets. Financial returns fill up our basket of carry, if you will, but how much of it actually gets distributed to us is dependent on how well we perform on our impact. We could make a ton of money for our LPs. If we only deliver 50% of the impact, we get 50% of our carry. So we really, when I say we believe that the two things go hand in hand, we've put our money where our mouth is. And so in the case of H2 Green Steel, for this investment to deliver the impact we've underwritten, it needs to have scale, right? It needs to have scale and wide market adoption. But that also means that it has to be commercially successful. It has to have a great management team that's capable of the vision and capable of execution. It has to have market traction, and it needs that same broad adoption. The same things that will make sure lots of people are buying and using this product that generate economic return are the same things, because those are the goods and services that actually drive the climate impact. And there are actually plenty of climate solutions which function in this way, especially if you're focused on core economic sectors, because you're essentially displacing something that already exists, which has a very, very large addressable market. It's not the case in all instances, by the way. It's very easy to sound Pollyanna-ish. It's not the case. There are other areas where the market is not sufficiently evolved. Ecosystem service is a great one, where there's opportunity for outsized impact, but the monetization hasn't happened yet. So this isn't me saying it's always possible, but there are plenty of ways right now in which an investor can deploy capital into incredibly high impact climate solutions and still generate returns without viewing it as a trade-off.
How about you, Anibal?
And I wrote a few bullet points about, I always give the example, there is something we're doing in recycling, but I'll mention, Luciana, hopefully you don't mind, I'll mention something in energy. We are invested in a battery storage business called UCV. I don't know if you know this statistic, I just wrote it. 1 million people in the north of Brazil don't have access to the grid. And the way they get access to energy is through diesel, basically diesel through trucks. So this business, what it did, it basically had a hybrid kit with solar and battery. And now these people have 24/7 access to energy, obviously less impact because now they need less diesel, and now they have access to fridge, to TV, and to internet. Touching on the social part, they now have access to education and virtual primary health, something they didn't have before. This business has grown, Evelina, for us 5 times EBITDA, growing at 45%. So I hate this question is there is a trade-off in return. We are doing trade-off because there are opportunities in which we can extract and at the same time help countries like Brazil or other countries that need this sort of services.
Okay, but at the same time that we have these incredible investments or companies, the investments are not flowing at the velocity that we need. So in your perspective, what are the barriers? Why the capital is not like being allocated in the solutions that we need in the time that we need?
So
I was going to say less taxes, but
I won't speak about taxes, so go ahead. Well, look, I said it. The problem is, so here in the US, there is a lot of liquidity, right? The market has liquidity. The market is just nervous in investing. They're nervous in being penalized. So if you're a smaller fund, even though you said you are a big fund, but if you're a smaller name and not a Fortune 500, you're humble, right? There is some backlash of investing in the wrong business, right? Part of the impact side of my business, I look at a lot of companies, early stage, and it's hard to understand their trajectory, right? Especially in the MRV space, and that's something Campbell can speak about. So measuring, reporting, and verification is a huge part of credible offsets. And there are 10, 15 very credible companies, but when you ask them how they're actually auditing, it's a little bit mind-boggling that there isn't really a track record, right? So then you as an investor start thinking, well, how credible are their cash flows and P&L and so on. But Campbell, I don't know if you want to touch base on that.
Yeah, I think I might pivot from that a little bit to think about barriers sort of more broadly for the market. So again, speaking specifically about kind of the nature-based carbon markets, what are the barriers to investment? There's a number right now, and they're significant. The big picture is, I don't think net zero is dead. I think like the buzz around net zero, the branding, the stuff like that is turbulent right now. But the concept isn't going to go away as long as we're trying to actually solve climate change, right? Like, we're going to have to reduce emissions as much as possible, and it's not going to be enough. We're going to blow through 1.5 C somewhere between 2 and 7 years from now, is a new paper published in Science relatively recently. So we're going to need something to help us kind of close the gap between decarbonization that's feasible and the incredibly steep level that is needed, and it's going to be, a lot of it's going to be nature in the carbon markets. So what are the barriers? So there's barriers, bring it back to Brazil, barriers that Brazil, people in Brazil, companies in Brazil, the Brazilian government can control, and barriers that they can influence. 3 barriers to scaling. 1, quality of supply. Are the carbon credits actually achieving what they claim to achieve? What we need to do there is we need to sort of take the science basis from 2012 to 2014 era science that it was largely developed on and bring it up to 2023. So all you can do is the best science that's out there. We need to urgently do that. That can be done in part, well, maybe I'll go through the barriers and then I'll explain it. So increase quality of supply as much as is feasible. Clarify responsible use of offsetting towards net zero, right? For companies and for governments. That's like what's partly behind the sort of Delta lawsuit, right? It's like, what is the responsible way to use carbon offsets when you're going to make a claim around it? Until we have clarity there, it's going to put a freeze on the market. And then from our perspective, from the Nature Conservancy's perspective, the third thing that's most important is to align the nature-based carbon markets with other global goals around biodiversity and around poverty reduction, equity, the SDGs. There's a big opportunity there. So some of these things are happening. I guess the good news, we were talking about this before the panel, like how far through the storminess are we? I said 40%. 40% is pretty good. It's not halfway, but we're almost halfway. The good news is like those three things, high quality supply, responsible use of offsets, those two at least, there's big global initiatives working on that right now. What the Brazilian government can do is provide the sort of stamp of approval that only a government can provide. Like maybe they want to wait a little bit, see what the ICVCM, the Integrity Council for the Voluntary Carbon Markets, see where they end up, and then think about importing some of that into Brazilian regulation so that then you have the stamp of the ICVCM and you have the clear signal from the Brazilian government of we think this is good enough for now and we'll keep adjusting with the science. That could unlock massive investment, that alone right there, right? Benefit sharing, particularly relevant in Brazil, relevant everywhere. People, when it comes to nature-based carbon markets, it's like people on the ground, indigenous groups, forest owners, farmers, large farmers and small, they are the ones producing the product. They are the ones doing the thing that is benefiting the climate, and they need a benefit fairly from it, and that's good for business. It's good for the credibility of the carbon credit because it kind of falls apart if the people producing it aren't getting a fair share. So the Brazilian government could lead by showing what real best-in-class benefit sharing looks like, building that into legislation, and then investors have the certainty to know, okay, X% of my revenues are going to need to go back to the indigenous groups on the ground. Great, now I know that, now I can make rational investment decisions based on that. So anyway, there's parts of this that need to be sort of solved at the global level. Parts, I think, Brazilian policy, state and federal, can address that. And anyway, I'll stop it there. You passed the baton to me. I didn't answer your question there. Maybe I'll do it real briefly. MRV. There's AI is everywhere, right? There's the AI revolution happening. There's sort of the advanced remote sensing solution happening. That is a key part of, I think, that first piece, that high quality supply thing, bringing the quality of the carbon credit up to the state of the science, best science in the world. If we want to build a $1 trillion market, we can afford to use the best science in the world. I think that's kind of where that fits in. It's critical, but there's a few other pieces too.
I might actually then look at it from the industrial side of things too, and upstream, which is, let's take a step back. I love your question because it's a really important one. Of the sectors that cause 60% of emissions today, and I mentioned a few of them, the hard to abate, steel, cement making, shipping, aviation, they get 10% of total climate flows. 60% of emissions, 10% of capital going out. And the reason that happens isn't that there is a lack of climate solutions or that they are ununderwritable from a commercial point of view. It's actually a capital allocation problem. And interestingly, that is why we were set up as a business, is that there's actually a lot of white space in the market. Because a lot of climate solutions, specifically on the industrial side, will tend to fall between the gaps of conventional asset allocation. If you're trying to decarbonize steel production or cement production, there's going to be a couple of components to whatever you're building. One, it will have to be really big, because you're talking about sectors that have huge demand. Two, it will be, you're building stuff. It's not going to be a tech-enabled marketplace. You're going to be building stuff out in the real world. And three, it's going to be relatively new because, if it wasn't, then the sector wouldn't need decarbonization. So you basically have this opportunity set that could transform these sectors that has a couple of characteristics, which means that it just doesn't fall into the need buckets of strategic asset allocation as we think about it today. It is too big for VC, which tends to fund new stuff, new disruptive stuff. It is too asset heavy. There's too much on the ground construction, physical, real assets involved for growth equity. And then it's still too novel for infrastructure capital. And so you have this investment valley of death. Now, From an investment manager side of things, that's the reason why Just Climate exists, and we're seeing huge amounts of opportunity, and we hope that many more people will come in. We believe in working in partnership. The reason we're doing what we do is we hope other people will copy it, because we need more capital going into that space. But also, there is a need for the capital further up the chain, the people who are LPs, for example, for Anibal and I, the pensions, the insurance companies, particularly on the institutional side. Family offices are huge contributors, but specifically on the institutional side, to transform how they think about asset allocation. Because finance needs to evolve just the same as the rest of our economy. We cannot do this without that, and this is a necessary time. And the good news is, look, we were able to raise a fund focused on industrial decarbonization within this mandate, specifically solving for highest climate impact and then underwriting commercially from institutional investors. Not all, but many of them are shifting their thinking and starting to think about allocating capital more flexibly and foregoing that very rigid 3-bucket thinking to allow us to be able to do this. So I guess the big takeaway is there's evolution required at each step of the value chain for each of the actors. And evolution is there's always a little bit of act of faith and leaving some things behind and dealing with a little bit of ambiguity. But the good news is that it's happening. It's messy. And I think the key thing is, as you say, the process is murky and stormy. It's important not to lose faith and keep doing the work and replicating it for other people to follow.
Evelina, you stole my speech. The asset class, first we are an emerging market and we need to accept we are an emerging market. So I don't know if you imply it, but hopefully I'm not putting words in your mouth, but we need to provide above developed market returns with the risk that we have. It is what it is. But the tailwind is there, and the climate investing is becoming an asset class, and people need to start like investing in tech or investing in I don't know, healthcare. Is it becoming a climate? That's on the offensive side. On the defensive side, if asset managers are not taking in consideration the climate change risk, are not doing their job, like fiduciarily speaking. So it's becoming, if the capital is not coming, maybe they're missing the opportunity, and that's why we have big opportunities like Sigma that I don't know, Daniel was explaining that the company was great. So those opportunities can be captured because the capital was there. Maybe there's an arbitrage there, but it's definitely an asset class, and hopefully we can grow it more and more, and competitive, collaborative, or whatever, the bigger the industry, the better. Mm-hmm.
So, and what is the role of innovative finance instruments and like blended finance? I think you work a lot with blended finance. We were, before this session, talking with a philanthropist. So what is the role of these different ways of combining capital to deal with this challenge of not know how to allocate capital to climate?
Sure, yeah. So, I mean, I guess I'll talk about it specifically kind of around what the Nature Conservancy does. So we have a full team called NatureVest that is trying to promote investment in nature as an asset class. And investing in nature is generally, not always, but often kind of either it's a sector that's kind of stormy, as we talked about, or it's just nascent, right? And so we think about blended finance as being absolutely critical to de-risk that for investors so that you can provide returns that are going to allow you to move capital into that space. It doesn't really work without that. And so to try to make that real, what that means for the Nature Conservancy is, I'll talk about it from the carbon markets. So right now, we raised a fair amount of philanthropy a year and a half ago. We need to raise more to start this Natural Climate Solutions Accelerator, so a global accelerator program where we're starting new carbon markets projects, nature-based carbon markets projects around the world. We have 17 we're working on right now in the first round, and we're doing 3 more rounds in the next 12 months is the goal. So we're kind of creating this whole new portfolio of early-stage projects, none of which have hit the market yet. Our goal is to kind of have them all represent that highest level of quality that I referenced earlier, right? But this philanthropy it's just a spark to like get it started. Then we need blended finance to scale it up. So we're also working on that. Can't share anything else about that yet. So we're also working on sort of a large blended finance strategy to scale this up. And I think that really is, in some of these sectors, what the market needs for a little while. Not forever, but for 2, 3, 4, 5 years, so we can get through the storminess, prove it works, and then have more traditional capital scaled up.
So to finish, in your perspective, what are the lessons that Brazil can learn from what you are working in other countries?
So I think, first of all, Zimbabwe was a shock to the world, right? So Brazil don't tax the way that Zimbabwe did. I think companies right now are investors. So when you buy carbon credits, you have to think about what type of carbon credits you're buying, where they originate, how credible are they. We need to move the market to not a investor solution, but a buying solution. So I think, first of all, I think Brazil can help push that agenda. I think other lessons are to make sure that Brazil helps the developers receive finance. If developers have good conditions to actually create solid credits, the market will transform as a leader. That makes a credit that today is probably trading at $4 start trading at 30 or 40, even though, in my opinion, a credible credit should be around 100. If you look at the compliance market, which is an $860 billion market, versus the VCM, which is a $2 billion market, credits are more or less trading at 80 euros, right, which is maybe $90. If you're looking at DAC, you're looking at $250. Most companies that are buying carbon credits are actually buying them at $400. So if you look at Microsoft, the latest buy that they did to achieve their net zero target, which, by the way, they're promised credits, that isn't a credit that's being bought now for today, which is crazy, right? So we need to create a market that are credits for today to start off. And if you look at other more technology advanced credits, they're at $600, like Charm Industrial. So I believe that the Brazilian government needs to demonstrate the world that they are helping their developers actually receive good finance. I think that's the role of Anibal. You can come, there you go. I saw you gave me the thumbs up on that. But I hopefully that is a starting point. Anibal?
I was going to answer something else, but I'd rather go a little bit more macro. I don't know if that's the right question, because we are all in together, and lessons here, lessons there. I think we need to be collaborative as a country. Each country has its own characteristics, its social challenges, climate challenges, and the politics around it with its own constituents. So we need to sit and be humble, everybody, not Brazil, not Germany, not US, and sit and be humble and work together to find the solution. So there are lessons to be learned and lessons to teach around the climate, because if not, it will be a problem for us or an opportunity to make money. So that's, I think, the way. Maybe Luciana, next event we call it Brazil Solution, full stop. And not Brazil Climate, so if we're Brazil Solution, we invite everybody, okay? Because that's I was going to answer a lesson, but then I felt bad that I needed to work together.
And what do you think? Are there lessons that Brazil can learn? And if you want also to wrap up your thoughts.
That seems kind, but it's not, because now you have more time to think than I do. Well, actually, I think Anibal said it very well, because this is a question of partnership. Every country has its own specific challenges and constraints. The reality is emerging markets have a more delicate balance, in the sense of there is a need to create economic opportunity while creating new infrastructure, because those are the parts of the world that are growing the fastest, urbanizing the quickest, creating a new infrastructure, social, economic infrastructure the quickest, while doing that in a way that's consistent with net zero. And there's a need to have a lot of compassion and empathy for that. And not just assume okay, this is the most linear way, computer says X, and that's the way that it needs to be done. Because just transition is a huge piece of this, right? People have to believe in this. They have to feel like they've been heard, they've been consulted, and they're participating in a process. Because otherwise, whatever change that we achieve on the path to net zero will have massive fallout in the end. It can be something that's imposed from the top down. And so fundamentally, it has to be a journey of partnership. I would agree that there can be policies here and policies there that are particularly powerful, but it's more around the spirit in which you engage with the question and the process of how you go to the solution that drives the quality of the solution that we get. We all know the problem that's been set, so the focus really needs to be on that and doing that in partnership within a given country. So all places that are not homogeneous, diverse, different economic classes, different needs, but also collaboratively sharing what we can learn from each other and adopting best practice. And some of these things need everyone to act together. Carbon markets is a big one, but we need to fix it. It needs to work as well as others do. So I think that's it for me.
I'll say two things briefly. Only one of which is about Brazil. I think Brazil should be in the space of creating lessons learned for other countries. Brazil is a powerhouse full of brilliant people, massive country, tons of potential. It should look for lessons to learn from others, but I think Brazil is probably more appropriately going to create lessons for other countries around the world. Second thing is, I feel like sometimes we kind of get very caught up in the jargon of net zero and the Integrity Council for Voluntary Carbon Markets and MRV and like all of this stuff, which is all important. But I think it's really important for us all to just sort of stand back and remember that ultimately we're talking about saving the world. Like that's what net zero is like trying to save the world we live on. And we need to do it much, much faster, starting tomorrow, actually starting today, starting after cocktail hour. And when we start doing it much, much faster, it's going to be really, really fun. So let's get to work.
Let's go.
Marina, can I, just for the students here, please come to Brazil. Don't go to investment banking. Don't go to consulting. Come and do entrepreneurship here in Brazil, or there in Brazil. It's a big, big ocean there. Then watch. Please don't stay here.
Thank you.